Hey everybody, and welcome to another episode here at Tribal Trades, the daily show coming at you from a timeshare down in Destin, Florida. One hell of a drug. And I do want to welcome you to the channel wherever you are tuning in from around the world. Thanks for watching. And I do apologize in advance, there is no video. I am actually not in a timeshare in Destin, in a hotel in Destin, Florida. And so video quality just isn't up to scratch. So you'll just have to do with my voice for today. And of course, we're going to jump into all the action in a moment. But the title of today's video is the worst behind us. Is the worst behind us? What possibly could be coming next? What I'm doing in this trading environment. We're going to cover that whole bunch more. We're going to look at the Bitcoin chart and possibly where we're heading to from here. But before we do that, smash the like button. This does help get this channel out to more people. And of course, does help support the channel, as does your wonderful comments that you're so kind to leave in the comment section. You take the time to write it. I take the time to read them and respond. So we see here that the market is now realizing that we still have 10% baseline tariffs, 25% on automobile, 25% on steel, 25% on imports from Canada and Mexico, and 145% tariffs on imports from China. And I can't even keep up with, China slaps on more, the US slaps more. I don't even know what it's up to right now. It just continues. The retaliatory tariffs keep going. And while there is a pause, it's just a pause on the reciprocal tariffs. So, and that's not including China. Okay. Now, even though we have the PPI number came down, CPI is down, inflation is down, where does that leave us to? I think it leads us to a buying opportunity. And so if we have a look at Bitcoin here, we can see that we came down and we tagged the 50-week moving average down here, and we still haven't had a close below it here. We've come down, we've wicked below, still haven't had a close below the 50-week moving average. And again, remember, if you're a new watcher to the show, welcome aboard. Make sure you subscribe to the channel, smash the like. But as you can see, we are testing right now up this Fibonacci level at 83,100. So we haven't been able to get above this level now for since Sunday when we had a big sell-off down there. And as you can see, what is my line in the sand for getting above and for a continuation of the bull market? It's going to be the 200-day moving average. We need to close above that. But more importantly, we do need to breach this $88,000 level. That would actually give a new higher high here. We need to get to 89 there. So we'd need to come up at least to this $89,000 level. And then we would create a higher high there, and that's what we want to do, and we want to change in market structure. So I'm not going to be getting too excited until Bitcoin gets above this 200-day moving average. I'd love to see a weekly close and also a weekly open and close above this level, and also obviously breach the 100 EMA on the daily, sitting at 87, but more importantly, this 88,000 level here. That would create a much needed change in structure. And you can see there on the weekly time frame, that is the line in the sand there that we do need to get above. But of course, the 200-day moving average, I think if we do break above that with volume, retest as support, have some closes above there, I don't think it's long before we get above that level there. Where does that leave us? That I have been buying these dips. I accumulated, as I've told you, I nibbled at the Tribal Trades trend line. When we broke down further, I nibbled some more at the 50-week moving average there. And I even managed to pick some up around the 74,000 level, had some orders down here at 73, 69, and 67, just in case those levels got hit, and they may not. All this doom and gloom talk, we may not see Bitcoin come further down to these levels. That liquidity may get left behind, and we know we have a lot of liquidity to the upside. And we can have a look here at the yellow brick road, because we're going to follow the yellow brick road. Follow the yellow brick road. We're off to see the wizard, the wonderful Wizard of Oz. And as you can see here, we've got a little bit of a double bottom down here, a WW, but even on the liquidity chart, that was bullish. And of course, we did see a push up, a slight pullback, and now we're kind of stopping at these levels here. We do see that there is more liquidity to the upside on this 1 month time frame to the downside. There's that $88,000, $89,000 level that we just don't want to wick into that. We need to close above that with volume there in the charts. Look at the 6 month time frame. The 6 month time frame here, as it loads, you can see this level here, we didn't quite get down to the 73 level. There are billions of dollars down there. A little bit surprised while we were down there. We just didn't come and tag it. Maybe the market makers come and plan on tagging that later in the bear market. And of course, we do have this area to the downside there, billions of dollars, around $64,000 to $66,000. I think that's less likely to get tagged. Otherwise, I think we probably have come into a bear market, unless it's just one giant wick down and up. Would be one giant scam to come and get all of that liquidity down there. There's just so much to the upside there. 88,000, there you go again. As you go higher to 95,000, all through the 90s, all the way up to 100,000, billions and billions of dollars, all the way up to 107 and 109,000. I don't think this bull run is over yet. I've said this repeatedly in videos. Remember, what I'm looking for a bull run to be finished, we need to see a weekly candle close below the 50-week moving average, okay? Well, first of all, we need to see death cross, and we've seen that. That's where the 50-day, this blue line goes up, the light blue line. That's already happened. We've already had the death cross. Number two, where we see a weekly candle close below the 50-week moving average. We haven't seen that. There's a chance on Sunday for that to happen. If we see it close, that would be trigger point number two. Trigger point number three is a full weekly candle open and close below the 50-week moving average. And then for final confirmation would be a dead cat bounce, rejection into the 200-day moving average, and rejection from there. That would be the fourth. Those historically has been the pattern that has played out for every single bear market, of transitioning from bull market to bear market. And obviously I shared at the beginning, we want to see a break above that 89,000, this Fibonacci level here with volume to create a higher high. That would be a break in structure, a change in market structure. We'd be creating higher highs on every single time frame, including the weekly time frame there, of course. And I'd want to see a nice big weekly candle open and close above that level for final confirmation there that we are off to make new all-time highs with Bitcoin. But that doesn't mean all the altcoins. I've been asked this a lot, and that doesn't mean all the altcoins are going to go with it. Back in the last 2021 bear market, coins like XRP and Dogecoin topped out in around April and May, when we had that big sell-off between April, May, June, and we didn't really recover until July 2021. So be very careful about the altcoins that you are in. I think it's the quality altcoins that are going to thrive and survive and push on and make new all-time highs with Bitcoin, of course, as long as we stay in this bear market. One of those coins, I believe, is going to be Ondo. Not only is it building its own blockchain, it's going to be tokenizing real-world asset. That means you can hold your stocks on Ondo and be able to earn yield on them. Imagine holding your Apple stock with Ondo and Ondo paying you yield for holding your stock as they tokenize that real-world assets. And we have a real bullish move here for Ondo. It's currently above the 50-day moving average. Now, it's some way away from the 200-day moving average all the way up there. So early days, and this is just a bit of a push. But this is something that I've been sharing in the Tribal Trades Discord over the last month since we had this drop down of trading this level to level. Now, we can see the clearly identified levels of 91 cents to the upper top and 73 cents to the absolute lowest level to the bottom there. You know, we have a couple of wicks below, a couple of closes below, but really this is really where you can see it's come down into here. Yes, came down below, but we're back. And so really just trading the ranges. You know, you could have bought at 73, sold at 94, bought back at 73, sold here again at 90. A couple of beautiful trades there. Even better is this little area here between 81 and 88 cents. And this is the area that I've been trading in and been sharing in the Tribal Trades Discord. Is you just simply buy at 81, sell at 88, buy, sell, and there is numerous trade in there. It feels like there's about 10 or more trades where you could have just made money. You don't even have to leverage trade in there. You can just buy spot at 81, sell at 81, 88, buy at 81, sell at 88, buy at 81, sell at 88, all the way through this range here. And also you could have shorted it, and you don't have to short with high leverage and be risky. You can short with 1x. So that's like a spot buy, but to the downside, where you open up a short position at 88. When it hits 88, you sell your long position, your spot position, and then you would buy your short position at 88 and then sell it when it gets down to 81. Honestly, you can make money in this market. If you're underwater in your coins, you should be able to make money in this market. We can show you how, and you could of course be leverage trading this as well, open up leverage trades, and you can do both. And you don't have to be a day trader to do this. Many of these trades took several days to play out. Some of these trades even may have taken a week to play out to get from the low there up to where and actually we're above the 50-day moving average. We're actually climbing back below it, but we have the 50 EMA on the daily there at 91. So really there at 90, 91, and 88 is a big sell area. I wouldn't expect it to push through unless Bitcoin has a major move to the upside there. Maybe we can come up and tag the 50 EMA and the weekly at 97 cents there, which will be major resistance there. You can see that's where we broke down from. So I feel that these are still good accumulation areas. But I do feel once we break above the 200-day moving average, I wouldn't be putting in any more buys after that, after it takes off. This would be the area to accumulate. And obviously, anytime you get a break and a hold, a weekly open and close above the 50-day moving average, that would signal to me to be quite bullish. Although I do want to see us still break above. I would probably wait till the 50 EMA on the weekly, and maybe my last buys would be around here. And of course, as I've shared on my Discord a lot, my trading strategy, and on here on YouTube, by the way, about opening swing positions at these lows and hoping to ride them all the way up. So, obviously open a swing position here, okay, sell it, resistance, and you keep buying and then selling, then buying and selling, and of course buying and then selling. But eventually at some point, one of these rallies is going to run and you can just actually stay in that position. So let's just say I bought here at 81 cents there and at 73 cents, and then I'm able to ride this up and it keeps going, and then it just keeps going, and then it just keeps going. I can actually just keep staying in that position, and people might go, oh, well, hey, you bought at 81 cents, why did you do that? It's a swing position that can turn into a longer term position. And so that's why I like swings, and that's why I like scalps and swings, because I can scalp these both long and short there. But if you have a 9-to-5 job and you've got a pretty busy schedule, you can also play these longer swings that can take many days to play out, and then have your sell order in place, and then buy back at 81, and then just rinse and repeat, and you can play this all the way through. Okay, so that's what I'm looking for my play with Ondo. If you're interested in joining the Tribal Trades Discord, there are links below in the description. You might need to click the more button that will pop out, and there'll be a link there where you can get started on your trading journey there. And then of course I'm in the Stocks with Josh Discord as well, and there are links also below in the description. I have my Crowned Traders channel in there where I share education, insights, and my trade setups, and of course entertainment, because this is not financial advice. I'm not a financial advisor. This is for education and entertainment purposes only. Are you not entertained? Okay, I've got a whole bunch of plays. We also do stock plays in there as well. Some of those stock plays are playing out beautifully right now. I give my buy levels in there, I give my take profit levels in there, my accumulation levels for longer term hold stocks as well. In my cheat sheet, I have the Tribal Trades Discord cheat sheet as well, which has all those levels: support, resistance, EMAs, MAs, plus all of the educational videos, tutorials as well. And we're building out a full training course in the Tribal Trades Discord, when you can learn the ABCs of training, or the A to Z of training, right through from the very basics to becoming a master trader hopefully by the time that you finish the classes, that you finish the course. And that will be being released. We'll start releasing those training courses very, very soon. Well, that's all I have time for today. Thank you so much for tuning in as always. Until the next episode, or until I see you in the Discord, happy trading.